market maven says it may be a good idea to trade against the market because a correction is coming. When? That's another question. David Dreman is Chairman and CEO of Dreman Value Management. Good to see you, David.
Nice seeing you again, Alexis.
So you believe that we are overdue for a correction. What does it look like? When does it happen? Or is that anybody's guess?
I think on a whole it's anybody's guess. Obviously, after an increase of something like 58% with the S&P and more with a lot of other groups, we'll have a correction. But when, people have been calling for a correction since the market's been 20% lower. So I think if stocks are going to move up as I think they will, it's better to just hold on and ride through.
The thing that scares me most is you suggest within the next 3 years that inflation could be 8 to 10%. You okay? You want me to get some water?
I'll be okay, yeah.
Okay.
Yes.
I mean, the concept of inflation, 8 to 10% in 3 years, what do we do?
I think I'd stay out of any long-term bonds because they're obviously going to get hit badly. So I'd stay in very short-term bonds and equities, or substitute like that real estate that's getting killed now, but probably will do well in an inflationary environment.
So you suggest that if that is the case and inflation rises, because I was reading some of the comments you made, you said basically the Fed will again fail to take the punch bowl away from the party too soon, and that Geithner and Bernanke right now are trapped between politics and events. If that is the case, how are we going to address that inflation?
We're not. I think they're trapped, and it's not, they're powerless because no administration can lower or raise interest rates when we have unemployment at over 10%, and it's probably going to take 2 or 3 years for unemployment to come down to say 6.5% or so. And so I think they're really caught here. They say that it won't come, but I'm very sure it will.
I find it very interesting because you're the guy who is the contrarian investor. You made a substantial amount of money by betting against housing, by betting against financials. And now you suggest that if in fact we see inflation rise to that degree and a bubble burst in bonds, to go out and buy a home today, maybe even buy two if you can afford it.
Well, I think if you have to have the staying power, so you'd have to have the ability to pay the interest and the taxes, and if you can hold on for say 5 years, have on a house or some kind of commercial real estate, I think there'll be big money made because you'll be paying the interest, the principal back in 50-cent dollars or 70-cent dollars or something like that. So there's enormous leverage. I think the real estate is the last place where you can really leverage an investment because we're only paying say 25% down, so we're getting a 4 times play on prices if they go down.
You've seen a lot of ups and downs.
Yeah.
Is this the worst you've seen, and what is this recovery going to look like? What worries you?
I think this is definitely the worst I've seen. I've never seen a meltdown. I've read about them, but I've never seen anything like 2008. I'm worried that the recovery will take longer to come back. Unemployment will just come up very, very slowly, and if that's the case, the administration, the Treasury, the Fed have to keep putting more money in. Although they're making signs now that they're going to start tightening up within a year or so. I don't believe it.
So, the new world we're going to live in, people call it the new normal. What is it going to be? How do we plan for that if this is a slow, painful recovery?
Oh, actually, if there is say there is inflation, for the next couple of years, it's markets may go up because stock market may go up a reasonable amount because it's just gone down so much. It's gone down probably more than any market since the early 30s. And so I think that, but beyond that, inflation is going to be a very powerful movement. It's very good for the stock market. It's very good for real estate because stocks always adjust, profits adjust to inflation. And they've done it in Brazil. They've done it elsewhere where the inflation in Brazil went up 1 billion times since the war.
So are you suggesting then if you buy into inflation being at 8 to 10%, the gold is actually undervalued here?
It would be over time. Now it's not going to be a straight line, and there will be some major reactions and downswings. But overall, if inflation is where I think it's going to be, I think gold will be at much higher prices.
All right, David Dreman, thank you very much.